Welcome to Markets Now. I'm Michelle with Brad Kooima Kooima Varilek, and we're seeing quite a bit of green on the board here this morning. And Brad, let's talk about the cattle market first. Live cattle futures, I think, D's through April, and the live cattle made new highs for the move last Friday. I guess the question here is, how high do we project now? Because this was pushed by the cash market, and does that keep going? That's going to be important as well.
Thanks for having me on, Michelle. It was a fun week last week, for sure. Nice to see the front end of the market take over here a little bit, with forward spreads working really well, and like you just outlined, some new highs in some of the markets. I tell you what, if you look at the daily charts, of course, which is what most of us typically do, they look really good, but you want to get a little bit excited here. Take a look at weekly and monthly charts. If we break out of this thing for real, it sets up a potential for, like a whole, changing the whole trading range, if you would, from where you could maybe argue that we traded from, say, 180 up towards 200, and what if we go through this 200 level now? Do you put in a new trading range at higher levels? I hesitate to, I don't know that I do anybody a favor by putting a number out there that is a wild guess on my part, of course. A little bit educated, I would hope to think, but a wild guess nonetheless. And certainly should be making your marketing decisions based on that, because there's always something that can happen, as we've learned the hard way here, right? With all sorts of black swan events. However, you asked the question. I would say that if I did just a first measurement of another leg up here on the daily chart, it projects in kind of a nice little spot, because it's just slightly above 200, somewhere around 201 on Feb cattle, which, given the fact that the fundamentals are, I feel we're not very far from $200 cash, right?
Right.
196 pretty much up and down the road here in the north last week. What if you get a little bit of weather? It doesn't take a big reach to think that you could take the cash to that. Now the futures, of course, have been struggling with this whole fear of the future here. Used to be that Feb cattle would trade a premium to cash this time of year, and now we seem to be stuck in this rut of, show me, we won't believe it till we actually see something before we dare to buy futures, and usually that something, like you said, is a stronger cash market.
So let's talk about the cash. You mentioned 196 in the north. The south traded higher, not as strong as the north, obviously. But what do you see for this week? Because packers, you said, are picking up these cattle and putting them on the kill floor right away. So it sounds pretty bullish to me.
Our experience here, last week, cattle that were sold for me on Friday are going to be delivered on Wednesday, and with a long distance address, all the way to Texas from Northwest Iowa. And that's not the only load that way. There's thousands and thousands of cattle that have been going that way the last few weeks. Would tell me, that either the cattle numbers are that short there, which I think they are shorter. Also that the quality of the cattle, or the grade of the cattle, is lacking, with the choice select spread being the way it is. That's another story, right? So maybe that's part of it. But we're talking about the South only got 191 last week. 196 plus all that extra freight down there is a little puzzling. So, on the one hand, if I looked at it just by itself, I'd say, okay, it's the week before we start to slow things down, right? We're going to have Christmas in the middle of the week, New Year's in the late. The Packers going to probably talk about, we don't need very many, blah, blah, blah. I think the Packers got a tough deal right here. He's actually still making a little bit of money. It seems like meat movement, especially in the middles, has been quite good yet. Demand stays pretty good. And what's he going to do? Let his counterpart to go out there and make money instead of him? I doubt it. So I would expect maybe what we're going to see is a little more flat market in the north, steady, better kind of a cash market here. But I would certainly think the South is going to, try to bow their neck a little bit. They got to feel a little disappointed. They took $5 less than we did last week. So we should see some appreciation in the South. I hope so, because where December cattle is 193.50 right now, last tick, compared to 191 cash, you do have December cattle up here, where if it's only going to be 191, the delivery process still might be a choice that some of those guys might make down there.
All right. And again, you said show list very small in the north. And one thing we didn't mention is box beef cutout values were higher last week. So certainly that is positive.
Well, it seems like all the bears want to, pull out their crystal ball and somehow, predict that suddenly demand's going to stop. I get it.
Right.
I can only go by what I see in the here and now. Record Thanksgiving travel, record Black Friday sales. Stock market, if it's not right on the highs, it's awfully close. I was hearing on the radio this morning that they expect record travel over the Christmas holiday. Okay, if you want to be Chicken Little, the sky is falling. I get it. You got to be careful. Said it all right. But right now, at this point, I don't see that this demand is I don't think it's slowed down at all, frankly. So we'll see. Moving forward, things typically do slow down a little bit after New Year with that. But generally speaking, demand stays pretty good all the way into Super Bowl.
Yeah. So live cattle showed a little more leadership than the feeders did last week, but part of it was because we had news about the border may be reopening to Mexican cattle imports, feeder cattle imports. Tell us what we know this morning and how that's supporting the board.
Well, first of all, this border is going to reopen, folks. We knew that when it closed. Okay. We know that there's protocol. Ivamec works, simple product. They've worked through all the details now. It's just kind of a matter of when. But speaking with a couple of truckers that actually have done this, moved cattle back and forth, this is a process on a best day that's not quick. And so, as USDA said here a couple of days ago, it's going to reopen after the first of the year. It's going to be gradual. It's going to be slow. They have to work through all the protocols. There's a few state protocols that have to be ironed out here yet with states within the United States, but it's going to happen. So I think that was maybe overspoke how big a deal it was in the feeder cattle futures market. Yeah, I think it had an impact on some of the light cattle movement in the South, especially. But to me, the big feeder cattle change was when they finally got moisture in the South 4 to 6 weeks ago. That really portended the rally in most ways. So there's that. If I had to say, is it a market factor? I don't think it's a big deal, but it maybe is a little bit bearish for the second half of the year. I mean, generally speaking, you're talking about a light calf that comes out of Mexico. So if you're going to have an extra increase of, say, a 500 to 600 pound steer calf, do the math, project out where that comes out, and maybe there's going to be a few extra in that time slot that we wouldn't have had. Otherwise, we would spread it out a little bit more.
And just quick, we do have a cattle on feed report on Friday, right?
Yeah, we sure do. I don't know. The last couple haven't had a whole lot of surprise. With the kind of kill level we've had, my expectation would be that the marketing number should be pretty good. I'm kind of anxious to see what the placement number is relative to Iowa and the North. Just because the placements have been down quite a bit from last year. We'll see. I guess I got to get a little closer to have a better sense of what the estimates are going to be.
Yeah. So hog market trending a little bit higher here this morning. Interestingly enough, the funds have exited some of their record long position. And so do you think that they will continue to do that?
Well, if you have access to a chart that'll give you the 50-day moving average, I would start with that, okay? We had four days in a row last week where the lows were right on the 50-day moving average on FEP hogs. While the funds have liquidated a few, for them to get out of a significant number, the market's going to make them do it. In other words, we're going to have to go low enough to do something to spook their position.
Right.
First step would be to take out last week's lows. So keep an eye on that 83.75 level on FEP hogs. If we go through that, I think you'd probably catch some more selling. I don't know. The short-term fundamentals that we hear are a little negative. Seems like we got a few more hogs around. We're going to slow the kill down. We might back a few hogs up. But we do have a hog report also coming up a week from today. And I think everybody's kind of looking at that hog report through, somewhat of a blinder type thing, because part of the thing that we really rallied with here, Michelle, frankly, was we thought we had a supply issue of 2 to 3% more hogs. And then we went through a period here where we killed 1 to 2% less. So I think a
Right.
lot of people are kind of wondering if the USDA is going to make some severe amendments here to the numbers, and then we're going to have to react after that. I guess after a $30 rally, my inclination is to think that there's a lot more room below us than above us.
Yeah. And I think there's anticipation they're going to revise some of those numbers, and they have in the past. So that would not be uncommon. Okay. The grains. We had a positive WASDE report last week, 200 million bushels less ending stocks on corn. The funds are really long, and they extended their long, not really long, but they extended their long position last week. And they keep going here because we're running up into this chart resistance we cannot get through.
The grain complex is interesting and a bit of a conundrum to me, because if I could separate just corn out of the whole thing, separate it from wheat, separate it from beans especially, I could build a case for a grinding higher kind of a corn market led by, the way the basis has been, the way the spreads have traded. Carry-out number on that last report actually has us below a year ago, which does kind of change the dynamics a little bit. I mean, we're not going to run out by any means, but things are a little more tight than we thought.
Right.
And that's because demand's been really, really good. And maybe that crop wasn't quite as big as what they first said. But the beans are such a drag here. Rain over the weekend again in most important areas of South America. We can't seem to get any separation here from the lows. And a chart that you can't just walk, you can't go sideways forever. I worry that we have to that we might break the beans through those lows just to see what's there, to break up, to run a bunch of those stops below the market. That's what I'd be worried about. And if that happens, there's very limited upside on the corn now. Wheat's acting a little better. Corn is fine, but it's so gradually up that, don't wait for the moon and stars. I think, another 10, 15 cents from here on the corn maybe is about all we can stand, unless we change the weather in South America.
That break you talk about in the beans, though, is that more likely to happen after the first of the year, maybe mid-January, when we kind of get a little more comfortable with South America's crop, because it's not in the bin yet?
Yeah, no, I agree with that. We've got to get a little further into their crop development. And if it gets to the point, Michelle, where it looks like their crop is made, like people like to say, and then you always have the February, March 1 situation where guys need to, pay some bills. So
Right.
maybe flat here for a little bit yet, but, be careful. I just don't think there's a lot to the upside there.
Gotcha. All right. Thanks so much, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.